Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our Stock Monday buys here on the 11th of May 2020. We're going to first cover on Facebook the anticipated earnings this week. Then we're going to go ahead and jump over into the M1 Finance platform, take a look at the Roth IRA, the performance for the overall portfolio, take a look at the 1 week change, what stocks were up, what stocks were down, the dividends that were paid out within this past week, and also go over 3 stocks I am planning to buy here today. One that goes ex-dividend on Tuesday, so if you buy it today here on Monday, you're able to own it prior to the ex-dividend on Tuesday, and then 2 companies that go ex-dividend next week. So we will be covering those in today's video. If you guys are brand new to my channel, I would really appreciate if you do go down below, subscribe to the channel if you are interested in stock market, dividend, investing. If you enjoyed this video, find it helpful and just entertaining, give this video a thumbs up now, or if you would like to give it a thumbs up later in the video, that's fine. And of course, if you have any comments or questions, or would like to let me know what stocks you are looking forward to this week on earnings, what stocks you're planning to buy, or what stocks you have been buying, or just general questions, always leave me a comment down in the comment section below. I do read and reply to all your comments, and let's go ahead and get into the video. So up on the screen now are the most anticipated earnings for May 11th through the 15th of May 2020. So really, there's quite a few out there, but not a lot of the big names. The most anticipated company that I am looking for here is what is on Wednesday, and it's Cisco Corporation, and this is one that I am looking forward to. I do own this company within the Roth IRA, and it's a we at my work use a ton of Cisco products. We are actually moving away from Cisco onto HP Aruba, but for the time being, that project has been pushed off, so we may need to order some more Cisco equipment. Plus, we've been using a lot of Cisco AnyConnect for working from home. So Cisco is definitely going to be one of those companies. I'm really interested in how they have done this first quarter and how they may fare in the upcoming quarter. So that is something I'm looking forward to. And of course, down in the comment section, let me know, are any of these companies here ones that you own and looking forward to just kind of checking out their earnings? Definitely let me know. Now, jumping into the M1 Finance Roth IRA, overall, the portfolio is still positive. It's mainly just from the earned dividends this past 2 years, which is what's kind of pushing us into the green. You can see that our market gains overall are still down roughly $399, but overall not too bad at all. Now, if we look at the 1 week performance, which is what I kind of like to focus on a week by week basis, just to kind of see how our portfolio fares in comparison to the market, the S&P 500. Now, here is the S&P 500 putting on last week a whopping 3.5%. So didn't really keep up with the S&P 500, but if we look at it more along with the Dow Jones at a 2.53, that's about relatable there. Not as much. And then the NASDAQ completely blew it out of the water, up 6% this week if you watched our Saturday video on the weekly recap. So overall, we underperformed the indexes, but that is fine. Now, as far as our best performing companies this week, we can see Las Vegas Sands. Now, there's a lot of announcement out there with a lot of the businesses, small, mid cap, businesses being allowed to open up on their own terms. And there's always going to be those restrictions. You may have to have 6 feet apart, have a face mask, or be so many people in a building at one time. There's always going to be some sort of rules put in place, and that's going to help out Las Vegas Sands. I don't know if Las Vegas Sands is the one that recently cut their dividend. I know there was one here that recently cut their dividend right there. Okay, so it was Las Vegas Sands that they did suspend their dividend during this downturn, and that's fine. I'm going to continue to hold them during the downturn, but because of their suspension here, it looks like their company is rebounding here in the week. I have no I don't have any reason to currently sell them. Eventually they'll kind of get back in the business. A lot of companies are going to be cutting, they're going to be suspending dividends during this downturn. This is sort of an unprecedented event that really no one was really prepared for, being forced to shut down due to what is currently going on. I don't think any company or business out there has really planned for an event like this, and Las Vegas Sands is just not one of those companies that can make revenue, income, any sort of way besides trafficking people through their establishment. So with that completely shut down, their revenue begins to drop quickly. Stanley Black & Decker up 10.17. Lowe's, Eaton Vance, Lancaster, Main Street Capital, Apple, all very much positive here within this last week. Now, if we scroll down to the bottom, what are our 5 most negative companies? Well, Simon Property Group, we have REITs, we have Consolidated Edison. This one actually missed earnings. We'll cover that here in just a second. This is actually one that I will be buying today. Again, they did lower their guidance. They did miss on their earnings and their revenue, but it is one that I believe they didn't lower it by much when they guided forward. Their high number is still within their means of where they were expected to hit, and it's still a utility company. It's got $462 in it. I'm going to go ahead and continue to use this opportunity to just buy more of it. Also, Altria down 3.09 in the week. Kellogg's down 1.82. Tanger Factory Outlet at 1.35. So really not a whole lot of negative down here. 8.2% is our worst performer, and then our next one's at 3 versus our gainers up at the top of 11, 10, 9%. And you can see their equity is it's just a tiny bit more in some of these companies versus some of my worst performers. Then we have a bit of the mixed in the middle, kind of keeping the portfolio overall more to the green side, obviously. Now, that is the companies for the weekly basis. Now, we did make 2 buys last week. If you guys tuned into the video, I bought Consolidated Edison and Walgreens. Again, I'm going to be continue to buy these 2, but I'm actually going to be throwing in a third that is going ex-dividend next Monday. So I wanted to buy a little bit more this week. That way, when it does go ex-dividend next Monday, I do own the company. And within this past week, we made $2.09 in dividends from Lowe's and 56 cents from Clorox, which will be my last payout from Clorox until I do end up buying them once again. If you watch my past video, I think it was last week, I had put in a sell order on Clorox and actually sold out of Clorox accidentally while making a video and trying to showcase something, and actually forgot to cancel my order. And now Clorox here, I sold it last week here in April. It wasn't last week, but I sold it on April 29th. I sold out of 0.52 shares at $183.62. Right now, the current price for Clorox is $204. So it's, the difference there with the amount of shares that I own only made a difference of $10.70. But I'm going to wait for this one to kind of come back down before I begin buying back into this specific holding. And then overall, we had quite a bit of dividends. I don't do the whole monthly recaps anymore as often as I used to. But if you guys are interested in doing like a monthly recap, I could definitely kind of get all my notes together and begin doing those once again. Let me know in the comment section below. Did you guys enjoy the monthly recaps going over the monthly performance of the portfolio, the overall dividends that have been paid out? You can see here that these last few months have been gigantic dividend payouts. This portfolio is now 2 years old, but on a monthly basis, it's putting on, February, it paid out $71. March, it paid out $70.43. April, it paid out $65.86. So that's 3 months right there that are getting paid roughly, we'll say $70, we'll say 66 plus 70 plus 71. So in 3 months, I was paid $207. You multiply that over the 4-month period, this is going to show 828, but this is actually going to end up being a little bit more just because during these past 3 months, we've also been buying more shares. We've been reinvesting our dividends, buying back more shares, which is increasing our overall dividends. Plus, we've been adding brand new capital into the portfolio, bringing our actual annual income going forward today to $1,001.68. Now this right here is showing $1,013.42, but again, Las Vegas Sands here in this past month cut their dividend, so I did have to decrease that to 0. I did have 4 companies raise their dividend, which was very nice, but because of that one here going to 0, that basically cut out, $13, I think it was $10.71 just completely vanished from dividends. But I still get the equity. Once that company does recover in the future, they begin to open back up, and we already saw that they jumped up 10% or 11% in the week, just because of the notion of having them possibly open back up, which is really nice. So there we are. We covered the overall performance of the portfolio, the 1 week performance, the activity for the week. Now, jumping into the companies that I'm actually planning to buy. Now, number one, I already talked about Consolidated Edison. This one actually released earnings, and we talked about a little bit how they lowered their guidance. Now, they did come in here just recently on Thursday, March 17th. They released their earnings. Now, this company reported earnings of $1.34 per share and revenue of $3.2 billion. Now, this was actually estimated at $1.43 per share. So you can see here they missed roughly by 6.3%, and also their revenue fell. They were expected of $3.6 billion. They came in at $3.2 billion. So their revenue fell roughly 8% over the same quarter a year ago. And here, as we kind of scroll down here towards the bottom, you can kind of see their overall growth, their results versus what they reported and what they had been expected. So you can see earnings missed by 6.3%, revenue missed by 10.2%, and their growth year over year for their earnings is actually down 2.9%, and revenue is down 8%. So this company has been affected during this time frame. It could have been a factor that played into it. Now, they did lower their guidance, which is something they had expected 415 to 435, but they adjusted they lowered their guidance to 415 to 435, while they previously had guided 430 to 450. So their high end here, 435, is still right near their low end of what they had guided. So I'm not sure whether we'll end at the very end of the year, but this is not that much of a lower. They're lowering it just to be on the safe side, but it's really not too much lower. That's a risk, a warning flag, a red flag. That's what I'm looking for, a red flag for myself. That's not a red flag. They're still estimated to come in right around 437 per share at the very end of the year, which is completely fine. I'm going to use this opportunity to continue to buy into Consolidated Edison. Now, this one does go ex-dividend on Tuesday. So as I said, today, Monday, I'm planning to buy this one, and on Tuesday I will own all the shares that I currently own, plus the new shares that I'm currently buying today here on Monday, which will be able to increase my income here. And Consolidated Edison will actually be paying out, see, it is a blue month, so it should be right in this area. So this one right here is going to be paying out, and an annual was $19.08, but on a monthly basis it's going to be $4.77. But with the new shares that I buy here today, it'll probably be maybe around $5 in dividends that I get paid out from that company. Now, the second company I want to continue to buy, and a new one for this week that I didn't buy last week, is Chevron. Now, this company here goes ex-dividend next Monday. So because of the way that I buy or deposit and buy stocks every Monday, this one I actually have to buy today if I want to have it for the ex-dividend on the 18th, which is next Monday. So I can't buy next Monday expecting to earn the dividend on that date. It's trading without the ex-dividend. That's trading without the dividend on the ex-dividend date. So I will have to buy it today through Friday in order to have those shares on Monday. So Chevron actually reported their earnings here recently as well. So they reported earnings on May 1st, 2020, and they beat expectations. I was actually very surprised here. So results, check this out. So Chevron here, they came in at $1.29 per share on revenue of $31.5 billion. So they were expected earnings of 64 cents per share. So they aimed super low there. 64 cents per share was what they had been expected. They came in at 129. That's a surprise there of 87% for their earnings per share surprise. Also revenue at 31.5 and expected 31.1 billion. So that's a revenue and beat by 1.3%. Now, revenue growth is down roughly 10.5% year over year for the same quarter. But overall, I think that this is really good for Chevron, and I believe for the week, Chevron had actually been positive. Correct? I think they were one of the better of the performers. Let's go ahead and go like this. Maybe they weren't. Maybe they were down towards the bottom. Either way, it's a long-term buy and hold, and in the current time frame of the portfolio, I just saw them up here. So they were up 6.74% last week. Now, right now, they are down in the portfolio. Whoops, I just deleted that line. Chevron is down roughly 5.98%. So Chevron was a company in my portfolio that was down just about, maybe 2 months ago, roughly 30%. So I've been buying, lowering my unit costs, increasing my yield on costs, and bringing down my percent loss on this one from 30% to now down roughly almost 6%. So that is pretty nice. Plus, I'm racking up those dividends. Check out Chevron paying roughly $40 per year in dividends just from that one holding. So Chevron definitely looking pretty strong here, and going ex-dividend again next Monday. And then my final company here I'm planning to buy on today is Walgreens. I'm continuing to buy this one. Very low payout ratio. Also, just really low payout ratio, lots of dividend growth. Now this company goes ex-dividend on my birthday, May 19th, so obviously I have to be buying this company. Plus, they recently also released their earnings back in April, and they beat expectations. They came in, beat expectations, coming in at $1.52 per share with revenue of $35.8 billion, expected of $145. So that was an earnings beat of 1.3%, and also revenue here, they came in at 35.8 while they were expected at 35.3 billion. So that was also a beat there in revenue of 1.5%, and they have had revenue growth year over year. So even during this downturn, Walgreens stores are continuing to stay open as essential businesses, continuing to have individuals going in and using their services and buying up products. So we've seen a revenue growth increase year over year of 3.7% for Walgreens. So Walgreens, even though this past week they were actually negative this past week, I believe they were negative, by 0.32%. So overall from last week where I purchased Walgreens, I'm getting a deeper discount, just slightly, from where I bought them last week, but this is a long-term buy and hold. A little bit of negative here in the short term will not mean anything in the next 10, 20, 30 years out from where that company is today. Walgreens will continue to grow and expand, along with other businesses out there. So that is Walgreens going ex-dividend on May 19th, which is next week on Tuesday. So those are the three companies that I am planning to buy today. Again, that is Consolidated Edison, ticker symbol ED, Chevron, ticker symbol CVX, and Walgreens, ticker symbol WBA. Now, all three of these companies are actually negative in the portfolio. We have $121.27 split up between three companies is $40.42. So I'm going to go ahead and go to number one, hit buy sell, select, leave it as buy, and then port in here 40.42. Continue and confirm. Next, we're going to go ahead and go back to the portfolio. I'm going to go ahead and just type in CVX, makes it a lot easier to locate this one. Buy sell. Also put in here 40.42 and continue and confirm. And then the last and final one is Walgreens, ticker symbol WBA, and that is another buy sell. And here on the very last one here, we have $40.43 available, which is available for orders. We're going to go ahead and just use the rest of our funds to buy Walgreens, and that is it. Those are the three companies that we're going to be buying this week. Let me know in the comment section below. Again, are you looking forward to any earnings? Are you looking forward to buying up any companies? One thing I like to look at also at the very beginning of my videos that I didn't do in today's video, but we're going to go ahead and look at now, are stock futures. Now, why is the market moving up right now? Well, I don't know if I posted it yet, but it will be posted here today or tomorrow. I already have it announced and it's already scheduled to release, but the Fed is basically announcing that they are going to be beginning to buy bonds and ETFs. So if you guys haven't checked that out, I thought I had it scheduled here, scheduled post. So since you guys are watching this video, you guys have made it all the way to the end. This is an article that's going to be coming out here on was supposed to be going out on Monday. So the Fed said that they were going to begin to be buying up corporate bond ETFs, and also there's a lot of talk out there as far as which ETFs the Fed may be planning to buy here in May. They've already said that they will begin buying in May, and that's going to be pumping a lot of money into corporations, businesses here in the market, and just bubbling it up even further than it is. So we may not see a fall from this, or if we're able to, right now we're derailed, and someone's putting the tracks in front of us as we're kind of barreling through on some made up track. And if they are able to kind of put us back on track without any issues, then we're going to continue on our main course. But if for whatever reason, something misaligns and the tracks do not get placed in correctly, everything's going to stop. It's going to halt and hit really hard when that mine cart does fall off the tracks there. So let me know in the comment section below, what do you think about this market? I'd really like to hear from you guys. If you guys made it all the way to the end, I definitely want to give you a big thumbs up myself. If you guys haven't yet subscribed to the channel, again, I make stock market, dividend videos every single week. If you guys enjoyed this video, definitely give this video a thumbs up, and I will see you guys next time. Have a great day. Bye.